Hello and welcome to the Rising Tide market update for the June quarter of 2025. Over the next 4 to 5 minutes, I'm going to walk you through some June quarter commentary, touch on the stock market performance, interest rates, and I'll wrap the conversation up with a product spotlight on investment bonds. Now, the June quarter was a really strong quarter for global stock markets. We saw a confidence rebound as the tariff threats made by the US administration in early April were progressively wound back. That combined with strong earnings and sales from the world's largest companies provided a really good backdrop and bid for global markets. As the quarter wore on, expectations around Trump's big, beautiful bill built, and that bill looks to add roughly $3 trillion to US deficits over the next 10 years. The main takeaway is that US tax cuts put in place by Trump in his first term will remain in place, so a positive for global growth. We, of course, however, saw some geopolitical uncertainty in the Middle East, and that policy uncertainty I was just talking about regarding tariffs absolutely remains. So that's why we think it's important to remain comfortable with the uncomfortable as we invest moving forward. The underlying picture looks really strong. However, there are uncertainties. There are headlines that will create volatility, but we think the patient investor will be rewarded. Looking at global markets, the US, the S&P 500 was up 10.5%. The Euro stocks, which is Europe, up 1.5%. The FTSE 100, which is the UK, up 2.8%. And our local benchmark, the ASX 200, up 8.6%. All those numbers including dividends. Europe lagged during the quarter as it had a really strong start to the year. Now, if we look at the Vanguard High Growth portfolio, the Vanguard High Growth Index Fund, that was up. This is something that many of our clients are invested in. That was up 7.7% for the June quarter. So a really strong quarter, wrapping up a very strong 12 months of 15.2%. So the stock market absolutely climbing that wall of worry over the last 12 months and outperforming what we expect over the long term. As this, you can see on the right-hand side, this investment has done 9.7% over the last 10 years. As mentioned, sales and earnings remain really strong. If we look forward for the world's largest economies, we're expecting sales growth of roughly 5% and earnings growth of 10%, which is a good backdrop for global growth and the stock market. Now, what do we think has worked during this volatile period and what do we think will continue to work? Consistency is king or queen. A regular savings plan, we know, is the key to achieving those long-term returns and is really important when we navigate volatility like we have seen and like you can see on the screen here. Moving on to interest rates, the Reserve Bank here in Australia has reduced rates twice following moves from most global or most developed economies. We typically see this as not only a positive for mortgage holders and house prices, but a positive for equity and bond markets. Now, moving on to the product spotlight of investment bonds. Investment bonds are a product that we really like here at Rising Tide for the reasons on your screen. They are really tax efficient. So if you're on a high marginal tax rate, we typically see a tax rate in the investment bond environment of between 12 and 15%. They operate in a really stable regulatory environment. We know that superannuation is getting poked and prodded every day by the political parties here in Australia. That is not something that the investment bond environment has been or we expect to be subject to. So that stability we really love and gives us confidence. They're also a really great product for asset protection. So if you are a company director at risk of liability, we think this is a really smart move to protect your assets. Investment bonds are also CGT, capital gains tax-free, on transfers between parties and also investment rebalances, which we think is another big tick and important as we manage investments over different timeframes. Investment bonds are a non-estate asset. They sit outside your will and estate, so a really good option to and a product which remains flexible to manage inheritance and passing on assets to other generations or the next generation. Finally, ample investment options. Within the investment bond platform, there are a number of investment options to suit your needs and risk profile. As an example of what we use investment bonds for, we use them quite commonly for school fees, saving for kids' school fees, for child and grandchildren gifting, that is the inheritance piece, for debt reduction strategies, and of course, as a supplement to the superannuation scheme, so retirement. And that wraps up the quarterly commentary for June. Thank you very much for your time. If you have any questions about what I've discussed in these slides, please reach out to myself or your advisor at Rising Tide. Thank you, and I'll see you next quarter.